Let's talk to Jeremy Stretch. He is the head of G10 Foreign Exchange from CIBC, and he hasn't been here for a while. We had to check that we were still at this address. Very good morning to you, young Jeremy.
Good morning, Nick.
Right, Bank of England, 2 questions. Okay, if you were Mr. Carney, what would you do today? And second part of that question, which way is cable going for the rest of the year?
Well, 2 very interesting questions. I think if I were Mr. Carney, I would actually look at the uncertainties in the economy and also look at some of those issues which haven't been perhaps signalling a red flag in terms of rate increases, in terms of significant upticks in earnings. There are question marks about the consumer sector. So for me, I would actually, if I were Mr. Carney, actually hold rates at this point, but remind markets that they will go up at some stage.
Yep.
However, it seems more likely than not than rates will go up. But even in spite of that, I think with the reaction that we saw when we had the rate hike in November, it's quite instructive. We saw cable rallying very briefly, and then it sold off by about 150 points. That wouldn't be a bad template for today, unless there is a unanimous 9-0 vote, which I think is very unlikely, and unless the R-star equilibrium is a very elevated level. So for me, sterling, I think, is very much a sell on any rallies as far as cable is concerned.
Wow. Okay, let's put you on the Federal Reserve Committee. Okay, 2 questions. I think it's well documented that they're talking about rates going up twice this year. Obviously, one person's not happy about that, Mr. Trump, with his tweeting account. In terms of the dollar rally, is that likely to continue for the rest of the year?
Well, of course, the problem for the dollar, and particularly in the context of the Trump economic miracle, is the fact that if the dollar were to continue to appreciate, obviously that makes it rather more difficult to try and make America great again by boosting exports.
Yeah.
So in a sense, Trump doesn't want an overly strong dollar, although at the same time he would never actually say he wants a weak dollar, because of course he works in a very binary black and white world. Strong is good, weak is bad. However, the Federal Reserve are caught a little bit in the crossfire of that. They're dealing with the legacy of the fiscal expansion, which is probably a very late cycle fiscal expansion, which the Fed probably could have done without. So I think they are going to be pushing forward with 2 more hikes this year. I think they will be moderating their pace in 2019. And I think that's one of the reasons why we favour actually a cheaper dollar over the medium run, because the pace of tightening is going to decelerate. The growth trajectory is going to be far slower in 2019 than 2018, because some of the growth has been borrowed from next year. And I think as a consequence of that, when we come back to think about some of the other central banks getting back into play, then that does imply that the dollar, I think, will cheapen up. So we've seen an enormous run back towards dollar holdings in the last 3 months. That, to us, looks a little extended now. It may well be a case that we sort of chop around at current levels, probably for the majority of the 3rd quarter. But into the 4th quarter, I think we will start to see the dollar cheapening up.
Understood. Bank of Japan, obviously the headlines, rates will continue to be, at these lows. What are your thoughts on that? I had a foreign exchange commentator come on, and he said, obviously not in the immediate future, but he saw dollar yen going to 125.
I would be going in the opposite direction. So just going back to the previous answer, that we're assuming that the US dollar is going to, to lose ground. I think in the context of dollar yen, we're actually more likely to be trading towards 100, although I don't think we get there, than 125. I think the Bank of Japan went out of the way to say that policy hadn't really materially changed this week. Ultimately, what we are seeing is that the Bank of Japan is going to allow a slightly steeper yield curve. We will see yields moving up over time. I think the markets have been fixated with the idea that the Bank of Japan are never going to hit their inflation target, and offsetting or ignoring some of the other economic variables. The labour market is remarkably tight. We're starting to see some signs of a little bit of earnings growth starting to creep in. Now, of course, this is a big debate that we see in any number of markets, but I think we will find that the Bank of Japan are going to gradually allow a moderation in terms of their policy stance, and I think that will actually, alongside the broader dollar story, encourage dollar yen to be trading in the low 100s rather than necessarily getting anywhere near that 125 mentality.
Okay, so $1 million question. I always ask you this. Okay, what's your favourite currency pair in terms of on the bull or bear into Q4?
Well, we like having a stronger euro view. So in a sense, I think then beyond that, we're actually looking at some of the euro satellites as a potential better way to play that.
Right.
So whilst there is a little bit of political risk around the Swedish Krona into the election in early September, we like looking at the Swedish Krona. So that is a currency that we like being long of. The question is, which of the currencies of the majors do you want to be short of? Well, we think the dollar is going to cheapen up. Obviously, there's a great deal of sterling uncertainty, particularly into the autumn period. So sterling stocky, I think, is one way to play that particular trade.
And finally, in terms of the currency markets, fairly stable at the moment, would you say?
Well, obviously we're in thinner summer liquidity. I think we're, in a sense, looking at sort of well-worn ranges over the course of the last few weeks, and I suspect that would probably be the way that we would like to play it out through the course of the summer and into the autumn. I think then it becomes a little more interesting because, as I say, we start to think about what's going to be happening in terms of monetary policy.
Yep.
We then get another ramping up in terms of the Brexit-related discussions, and that, of course, adds a layer of complexity both to the sterling leg of the component but also the euro one. And I think those are the sort of issues that will potentially create a little bit of more volatility into the latter stages of the year.
So, senior FX traders lying on the beach this summer, do you think they're going to have a quiet one and can relax, not checking their price machines?
I think they probably can, although, of course, as we sit here just ahead of the Bank of England decision, then the cable traders or the euro sterling traders may well be getting primed for a little bit of short-term action. But I think because the Federal Reserve is on somewhat on autopilot until that late September decision, the ECB have done their level best to also just take policy out of the immediate realms of the agenda. That should imply that we have a relatively benign period until markets start to come back in after Labor Day.
On that note, Jeremy, thank you very much.
Thanks very much.